Okay, so we have a lot of new people here. So I wanted to, for this class, go over our model that I teach, and the way I trade when it comes to intraday trades. Most of you guys who have been here will know about this already, so this is kind of going to be more of a refresher for you all. But this is just mostly to get everybody caught up, so everybody is on the same page, and then I start introducing new concepts from there. So a lot of people probably still have questions about what exactly turtle soup is, and I'm not going to give you guys any crazy fancy terms that you're not going to know what it means. Turtle soup is very simple. This is how it'll work. So you have a range, high of the range, low of the range, and you have price that trades within this range. Okay. All right. So you have price that's trading within this range. As soon as you get a deviation from this range, like this, where price breaks above the previous highs that you have in this example, right? This is going to be your turtle soup setup, right? Now, there's different ways that this can be played, but the model that I'm going to introduce to you guys here is always to be used with a higher time frame PD array, right? PD array meaning a fair value gap or an order block, a breaker block, whatever it might be, right? So in this instance, here's your range, and then you have a higher time frame PD array that sits up here, right? So what's happening is price is making highs that are deliberately being put here so they do not touch this PD array, and that sets up for this move here, right? That sets up for this move. So there's your higher time frame PD array. So you have certain highs here that do not touch the PD array. And then finally, there's a move that is made that breaks through the highs, right? This is where you're going to be collecting all these buy stops that are sitting above these highs, right? And then from there, you go into the PD array finally, and this is where we are looking to short, right? After the people who were bullish here have stopped out, that is when we're looking to take our short. So this is generally what this model looks like. For a bearish model, obviously it'll be the same thing, but opposite, right? There you go. And then there's your higher time frame PD array, right? So here's your kind of accumulation, manipulation, right? This move here, more often than not, your actual turtle soup setup will fall within the manipulation quarter of whatever kill zone you're trading, right? So the turtle soup move is the manipulation move, right? That's where everybody is starting to become bearish. In this instance, everybody's starting to become bearish. We should anticipate the turtle soup already. We should already know, using time of day or the setup itself, that we are going to have a reversal here. This is just simply just a deviation from the range, just to collect buy stops, collect liquidity, and then the actual move occurs, right? So this, what you see here, just goes to show, and what we'll see in these live examples, is that markets do not move randomly, right? These random lows, what seem to be random lows that get put in here, here and here, and then these quote unquote random highs that we have right here. These are put there deliberately. They're not just random reversals in the market. They're there so that so the market makers can collect liquidity later on from the manipulation move, right? That's what happens down here. So let's go into examples. And the first one that I'm going to use here is I see already is this one right here, right? What do we see here? We have a 4-hour fair value gap that is left untouched when you get this break past this high, right? So you get the break past the high. This is your market structure shift, right? We're already in bullish market structure, but this is where you break the high, and I'm gonna have to mute people here. All right, there we go. You break the high. Here's your move with displacement. Fair value gap gets created right here, and you can see the next candle does not immediately reprice this, right? So there's no immediate rebalance of this fair value gap. It's left here intentionally, right? And then we have, here's your high of this fair value gap. So when you're looking at this, you're already in a bullish market structure. You can use your weekly profile, right, which we'll get into as well. Your weekly profile can be used in accordance to this move, right, to anticipate whether we either break through here, right, and go lower, or do we get a bounce and turtle soup right at this low, right? So that's how you'd figure that out. Now, if you go down to an hourly, you can get a bit more precise. So let's do that. And either you can continue to use this low, or you can go down to this low, the start of this fair value gap, right? And then here's the move that follows. And you can see this is Tuesday the 13th, which was CPI, right? And for the people that have been in here for a while, I've hammered this to you guys constantly, that news is almost irrelevant in the market, right? All that matters is pools of liquidity and how price reacts to certain pools of liquidity, right? In this case, we had this obvious 1 hour or 4 hour fair value gap turtle soup setup, right? And you could have already anticipated a long here based on a weekly profile, or just the fact that there's a higher time frame PD array that is unrated and has a low that is sitting directly above it, right? So the CPI move came with no surprise. We made a massive move down, right? You can see pretty big wick down, and here's your reaction from the turtle soup setup, right? This is something you could have anticipated already in foresight. Right now, actually, this current setup brings me to a great point here that I'm going to make. So a lot of you guys, if you have not already been, will short random highs, and you guys will buy random lows while you're trying to understand this concept, which is fine as long as you understand what you're doing wrong. But this right here is perfect, right? I know somebody that is trying to trade turtle soup out there will short this high right here. Right now, just based off of the model that I have given you guys in the last 10 minutes here, why would we not short this high here, right? Why not? Does anybody know? Higher time frame playing out. Okay, that's one. Higher time frame is playing out. This is a 4-hour setup that's playing out, right? No market structure shift yet. I'm not too worried about market structure shift because market structure shift is the later move, right? This is we don't focus too much on market structure. We're focused on two things, which is time and no PD array. No PD array above. Yes. I don't know why you typed it like that, but yeah, no PD array above, right? Our model includes a PD array. It has to include a PD array, right? I'm just giving you guys this model for the sake of simplicity. This is the easiest one that you can use because you can use this PD array as your risk. Instead of asking yourself, oh, where should I place a stop loss, this and that, whatever, just place your stop loss below the PD array, right? It makes it a lot easier for you guys who are starting out using this model. It makes it easier to understand, easier to execute, easier to play overall, right, in general. And it's not going to be difficult for you to spot a higher time frame PD array at some point, right? You can clearly see there's nothing above here, so I wouldn't short this yet until you go out to, you know, way larger time frames where, you know, daily, weekly, and see where you're currently at and go from there. But this intraday move, the whole reason why you wouldn't want to short this high, number one, no PD array, okay? That's number one. Let's get that out of the way. There's no fair value gap, no order block, nothing above here that would indicate to you that this might be a short setup. But the market maker algorithm is very smart, right? Obviously, market maker algorithm understands that a lot of retail traders nowadays are using smart money concepts, right? And they think they're better than everybody. So you know what they'll do? There will be random fair value gaps and random highs and lows that get put in just like this, that you will see this initial reaction off of them, right? Here's this 15-minute, and you can see what's our initial reaction off this high. It rejects the high, right? It breaks above, deviation from the range, right? And then rejects back down. So as an amateur trader, you might think that this is a good turtle soup setup, and then you might take this, right? That's what's going to happen to most of you guys. Right, that's what we're trying to prevent here. You will take this short at this high, anticipating a turtle soup, and it won't even hit your first target, right? And there's two reasons. First one being that this is not the correct setup that you want to play, number one. Number two, if you look here, we still have a 1 hour, not even a 1 hour, this is a 4-hour setup, right? We derived this setup from a 4-hour, right? This fair value gap with this low, even if you don't want to use the 4-hour, right? Let's say you don't even make it that high. Let's say you make it to a 1 hour. It's still a 1-hour setup. How long does a 1 hour or a 4-hour setup take to play out, right? This happened on Tuesday at 8:30 a.m. is when the move began. And the high here is Tuesday, same day, at 11:15. So not even 3 hours later, it rejects this high. Do you think, right, this is what you guys have to ask yourselves these questions, right? Because you will make these mistakes. So ask yourself, do you think a 4-hour or a 1-hour setup will take just 3 hours to play out and that's it? Especially a 4-hour setup. You think it's going to take 3 hours? No, right? That's not even a full candle close. So, you have to understand the type of time frame or what time frame the move that you're opposing is playing out on, right? Or even the move that you're playing, what time frame is it playing out on? What time frame did you derive the setup from? This 4-hour move is probably going to take several days to play out. That's what happens with 4-hour expansion, right? Turtle soup is the beginning and the end to every expansion leg. So 4-hour expansion will lead to a multi-day runner, right? So it starts here, and let's see what happens. I'm just going to close this. Look at that, right? It expanded for how long? And where does it end? Where does it end? It ends at a turtle soup, right? In this case, this turtle soup here, I know I will get questions. We are now at a monthly order block on ES, right? So I'm now officially, I'm looking for potential short setups. So if I see a daily or a 4-hour turtle soup start to play out, it makes sense to play that at that point, right? This is not just a random turtle soup that I'm playing. The ones who have been in here for a little bit, also the time, right? We're on the 3rd week. We're on the 3rd week of the month. Can somebody tell me what the 3rd week of the month is? What does that mean? Does anybody know what the 3rd week of the month is? Distribution. Correct. So the first week is accumulation, second week is manipulation, and then your 3rd week is distribution, and then you go into either further distribution or a reversal. Right? So as soon as the 3rd week begins, right before, rather, this is still within the manipulation. Actually, no, I'm sorry. This is when the 3rd week begins, is when this turtle soup occurs, right? So we're starting our distribution phase on a monthly cycle, and that's exactly when we hit this, we hit the median range of this 1 month order block, and now we're getting a 4-hour or a daily turtle soup. So this now makes sense to play. You see how easy it was for me to justify that as opposed to just shorting a random high, right? Right? Like shorting this random high right here. Just doesn't make sense, right? It's always going to get broken through, always. So it's important to know the time frame, the type of setup you're playing. All right. I want to show you guys some more examples. The only way that you guys will have this like hammered into your brain is by me showing you more and more and more examples and charts, and that's the only way you'll get it. Until you look at these charts for yourself, you won't get it. We have another one right here. Same thing, 4-hour setup. You have this low right here, fair value gap that is untouched, that gets left here on purpose. It is not repriced immediately on purpose, right? And then to add to it, you have these previous breakers, right? This is a breaker right here, this set of candles. So you have multiple areas of potential support down here, and this is the immediate setup we're focusing on. So now we can go down to a 1 hour from here. Same exact thing, really. There you go. We can make it a little more precise. You go to a 15-minute, same thing pretty much. Now this brings me to another point here. So this is a 4-hour setup here, right? If you're trying to trade this intraday, if you're trying to make a day trade or a scalp based on this setup here, it's going to be very difficult, right? Because it's a 4-hour setup. 4-hour setups will take, or even an hourly or more, they will take some time to play out, right? You're not going to see maybe an immediate reaction off this low and then a pump back up, right? You might see it hang around this low for a little bit, right? Maybe make another intraday swing low and then reverse, right? So it's very difficult to day trade based off of these higher time frame setups, right? But this is what you guys need to understand. So almost always on a good setup, the higher time frame turtle soup will be a lower time frame turtle soup as well. Okay? A higher time frame turtle soup will also be a lower time frame turtle soup. And you see it right here. Right there. This is also time of day, but I won't get into that right now. You see that your 4-hour turtle soup, while you're in the PD array that you're watching for your 4-hour turtle soup to play out, you see a 5-minute turtle soup play out within there. If I go to a 1 minute, it's even, oh, it won't even let me go. It won't let me go down to a 1 minute, unfortunately. But down here, it'll be clear to see on a 1 minute, but you can see it on a 5 too, right? You get the same exact setup you see on a higher time frame, the same setup on a lower time frame. So this is a setup that you can use to actually enter your trade, right? While you're in the PD array, a lower time frame turtle soup setup forms, and this is what you would want to long right here. Right, this is how you get the best possible entry. You can't guarantee a absolute bottom tick entry every time, especially if you're, using the 4-hour move, right? But the way you refine your entry is by using these smaller time frames, right? So you go to the 5 minute, and as soon as you see this candle down here get broken, and then a reversal, and it comes back into the range, that is your entry, right? Where does that put you? Let me draw a little circle. So let's say you enter within this circle, right? Within this range. That will put you exactly where you want, which is within your higher time frame wick, right? There you are. There's your entry. You go to a 4-hour, there you are. There's your entry, right? You see how precise we can make this entry now, just based off of a lower time frame, based off of just knowing what you're looking for, right? So that is how you get a refined intraday entry. You'll see this all the time, right? Where the entries are so precise and you'll never be able to figure it out. But this is how you do it, right? And you can place yourselves within this wick of the larger time frame setup that you're playing. That's the end goal, is to get entries like this that are down here, right? And then for those people who are going to ask me later on down the road, okay, where do you place your stop loss from here? Just place your stop loss at any reliable low that you feel will hold, right? That you feel is a good low that you can place your stop loss at, right? So there's a few places you can put your stop loss here. Number one, you can place it obviously just below the PD array, right? There you go. That's stop loss number one. It goes just below the PD array. You can place it below this wick, right? Which gives you a little bit of room below the PD array. Now, if you want to get even more risky, right, now you're putting on a lot of risk here at this point, right? So I would stick to these two. But if you want to put on more risk, then now you can look at other clues here. What else do we have? We have this order block, right? Now you can place your stop loss somewhere within the middle of this order block if you wanted, or the high of this wick, right, which puts you in the order block. So if price was to reverse, ideally it should reverse when it pulls into this order block, right? If it was a strong setup, it wouldn't already break this PD array and pull all the way into this order block. That doesn't make sense for a strong setup, right? So here are 3 potential stop losses for you guys that always ask me where you place your stop loss, right? And then there's the guys who are going to ask me, where do you place your target? Again, we go back to the same thing. What time frame did your setup come from? Let's say, hypothetically, not even hypothetically, this did come from here. Let's say this is a 4-hour setup, which it is. A 4-hour setup, as we discussed earlier, will not just take 15 minutes or 30 minutes or an hour to play out, right? 4-hour setup can be a multi-day runner. So we're not going to select intraday targets, right? You can if you want, but It's kind of dumb. It ruins the point of the setup. So your first target obviously is going to be your first 4-hour high that you see is going to be right here, right? This is a good first target. Then you continue back in time and see where you can place the rest of your targets. Okay, we have this high up here. You see how far back I had to go? Sometimes you'll have to do this. There's this high right here, right? And then you have this high right here. And then you have this high right here. Okay, so let's leave it at that. We have 4 targets. These are our targets, right? This might look like a large move. It is a large move. I'm not taking away from the fact that this is a large move. But again, you have to understand the time frame that you're playing. So if you're playing a 4-hour, it can take multi-days to play out and reach these higher targets because it's such a higher time frame setup, right? It's not a 5 minute it's not a 5 minute setup. It won't work the same way as a 5 minute does, right? Eventually it will go and distribute higher to your much higher targets, right? In this case, you hit the first 2 targets, right? The first 2 4-hour targets that we had. And then it goes down, potentially stops you out, probably stops you out, right? But, and we turtle soup again, actually, funny. And then it goes and hits your other targets that you had, right? So, that's how you, this for those people who are always asking me about entries, stop losses, targets, right? That is how you would go about placing them. So time frame is very important, especially when deciding a stop loss or a target, right? It's very important. Also, another thing, same thing that you cannot do is mix up the time frames depending on your trade, right? So if you're taking a 4-hour setup, where's my thing at? 4-hour setup, as opposed to 5-minute setup, right? That's what most of you guys intraday will use, either a 5 or a 15. Right, a 4-hour setup to actually begin to take place, right? For a 4-hour reversal to actually start to show and begin, it can take upwards of an hour or upwards of 30 minutes at least. We'll just put 30 minutes. Upwards of 30 minutes, right? A 5-minute setup, on the other hand, will only take a few 1-minute candles. And then it should, ideally, a good one, will start to play out, right? So you know very, very fast, you know very quickly if your setup's going to play out when it's a 5-minute setup or a lower time frame setup for that matter, right? As opposed to a 4-hour setup, right? For the higher time frame setup, you will be waiting potentially an hour or more for it to begin to play out. So you can't treat it as a lower time frame trade. Right? The one mistake that I see a lot of people making is that they don't have the patience when it comes to taking higher time frame setups. Right? You'll see an hourly setup or a 4-hour, and you'll treat it like it's a day trade. If it doesn't play out within 15 minutes or 30 minutes, you're already getting frustrated. You're already looking to stop out. The emotions are getting to you, right? That's the one mistake that I see. You got the setup right? Eventually it worked out. It went in your favor. You were correct about the direction. You were correct about the setup. But where did you mess up? You messed up because you mixed up the type of trade you were in. You treated a higher time frame trade as if it was a lower time frame trade. So that's one thing, right? That's one thing you can never do. All right, let me clear this. More setups. Let's see. I'm going through these live because I feel like this is better than me preparing a bunch of setups in hindsight already and showing them to you guys. Right, we see them live here. Um, there was actually one that I want to talk about. Might have been on NQ. No, it was on ES. It had to be on ES. Setup disappeared. Okay. There we go. So, there it is. Weekly setup, right? Obviously, weekly setup. Weekly fair value gap. Weekly order block below it. Right, so you have multiple areas of potential support that this can hold, right? And then you have an untapped high up here, right? Has not been hit yet. Your draw on liquidity is higher, just based off this alone, right? So any move down, especially into an area like this, should be a buy for you. You should already be looking at a smaller time frame to identify a playable turtle soup for you, and then play that to the highs, right? Again, this is a weekly setup, so we're not targeting intraday targets. You're targeting weekly targets. Treat it as the trade that you're playing. There you go. There's target number 2, right? This would be target number 1, this unmitigated high right here, right? And then use one of these highs up here. Then you go down to a daily, look at the same setup, and what do we see here? See this low, and then I see a daily fair value gap that falls within the range of the weekly fair value gap that we had, right? So if I'm just looking at the daily setup and nothing else, right, I already know this area is strong because it's a weekly fair value gap. But obviously, weekly fair value gaps can take time to play out. They will take several days to play out because it's a weekly gap, right? Several days. You see, we have this high, or sorry, this low, unmitigated, untouched fair value gap below it, right? So this high is put here, this low is put here deliberately, right? And they break this high right here on purpose so that they can sucker in those longs, right? Those longs have their sell stops below these lows. This is where everybody starts turning bearish, right? This is where people start thinking, and be honest, right? Because most of you guys probably think that this is a market structure shift too, right? Most of you guys right now will look at this and think this is a daily market structure shift. So it happens right here. You break this low, pulls right into the daily fair value gap. This is your higher time frame PD array. This is the same exact model I showed you at the start of this stream, right? Boom. Right there, right? I don't know why this is all squiggly. That's a bit weird. Here's your higher time frame PD array. Same exact model I showed you at the start. Nothing changed. You can see that happen right here. Now, this is a daily setup, so if you go down to a smaller time frame, if it even lets me go down that low, you will see a lower time frame turtle soup. Within your higher time frame turtle soup, you see it. There it is. All right. Does it let me go any lower? 15 maybe? Ooh, it does. Nice. I like it. All right. So you can use this previous low that you had, or go back a little further to see if there's any other low here. We have, what do you see? We have this low. Order block below it. Right? And there it is, right? There's your lower time frame intraday turtle soup. Right? This is where you would get your entry. Within the higher time frame turtle soup, there will be a lower time frame turtle soup. And then that is where you can get a refined entry. Okay? So, there's your setup. There it goes higher, right? We break through the first high that we put in right here, but it does not touch this weekly high that we had right here. Still untouched, right? So where's the draw on liquidity? Still higher, right? Still higher. This is another turtle soup that happens right here, and it completely fills the fair value gap, right? And here's the move higher. And then this is where your weekly expansion begins to take place. And this is where you truly see why you use certain targets for certain time frames and certain trades that you take. Because those people who spotted this on the weekly, I guarantee it, that they did not hold to these targets. I can say this because I spotted this setup, I traded it, and I held it to this target, and it's on my Twitter for everybody to see. So I reserve the right to say this, but a lot of people traded this setup as an intraday trade, right? And I'm not saying you cannot do that. You can do it, but you leave a lot of money, a lot of potential upside on the table, because you wanted to just take profits at an intraday target. I know people that traded this exact setup, got an entry down here, and closed it at a 15-minute intraday target before it even went in high a day, right? So this is why I'm saying it's important to understand the time frame that you're trading. What time frame is the setup deriving from? Yes, there's going to be a recording of it. Yes. Right, so there you go. Let's see. I know there's a few more. This was just a really, really good one that I wanted to go over because the whole world had their eyes on this one. I saw this on Twitter so many times, but I didn't see many people who executed it the way it should have been executed, right? So instead of this is what's going to help you determine targets and get rid of FOMO, right? Is these setups right here. Another one that I liked was that one that we traded here on live. Beautiful setup, beautiful trade. It was on, yep, it was this right here. This was it. Beautiful trade that we took. All right. Let me put the replay feature here. So, what do we see here? So this is the FOMC move, right? If anybody's confused, this is the FOMC move. This is the big drop that we had right at 2 p.m. And then this was the reversal that we had after that. And then we reversed again after that. This top right here is what we caught in here on live. It's all time stamped. So the first thing that I was eyeing up here was this 15-minute fair value gap, right? Which the whole world is trying to short. Everybody was trying to short this. So a few things to look at, right? Number one, everybody is trying to short this fair value gap. So the likelihood of this gap holding as resistance is already very low as it is, because it's an FOMC move, right? You see this large impulse move down, right? Immediate reversal, and then there's this fair value gap that's left here that everybody is thinking, I'm just going to short this fair value gap and it's going to go down further, right? So number one is that all eyes are on this fair value gap already. People are trying to short this. Number one. Number two, it is within the discount range, right? So discount range, meaning you have the high of the range, you have the low of the range. Here's your Fibonacci, right? Here's your Fib tool. And your 0.5, 50%, which is half of the daily range, you are below it, right? This fair value gap is below it, right? And you don't want to short while it's in a discount. You want to short above here. So anything above here is a short. Anything below here, you can buy, right? That's how you would want to take ideally, that's how you'd want to take a trade, right? So if this fair value gap is still in a discount, right? There's a little bit of it. There's about a third of it that's left in a premium. But I already know that it's not even going to work out. I already know that. Again, I reserve the right to say this because I did say this live before it happened, right? And those who were there can attest to it. Why is this not going to work out if it comes up here to this, the top quarter, or not quarter, more like the top 1/3 of this, right? Reason being is because once you close, once you get above about halfway to this fair value gap, if you start closing above the halfway point, right? The halfway point here is this smaller line right here. If you start closing above it, that's already a bad sign, right? That's a lower probability PD array, lower probability fair value gap. It's more than likely going to get broken through, right? So I already know this fair value gap will probably not work just based off of this move alone. And then what happens is we have two things. We have order block number one, and then we have order block number two, right? I like the higher one. That's the one that we ended up playing, just because in this case, just because of NQ, where NQ was. So I used NQ as a confluence factor. But what happens before we reach this order block up here? You get this move, right? This move where you form somewhat of a swing high. You can see it better on like a 3 minute better, maybe. No, it honestly looks better on a 5. We form this swing high, right? And it starts rejecting here. So those people that are trying to look for an entry, they're trying to get an entry so bad, because it's FOMC. They don't want to miss out on the move, right? They're not noticing that this is the same model that I showed you guys at the start of the stream. Same thing. Nothing's changed. Deliberate high that gets put in here before it goes and touches a PD array. And immediately what happens after is this move takes place. What does this move do? It pulls into the order block, right? This move is pulled into the order block. So what's the difference between this move and this move? PD array. That's the only difference, right? We pull into this order block, and this is where we got our short. This right here is where we had our short. If you go to Wednesday, the 14th, go into the alerts channel for me and scroll up, and you'll see exactly the time that the alert was given. And it places us right at this high. So we waited the whole time, the whole way, the entire time we waited for this high. And that is where we got the short. And obviously, you target your next PD array, right? Price does what? How does price move? People who have been in here for a little bit, you have heard me say this multiple times. How does price move? Price moves from what to what? Correct. So price, if you go back and just look at any movement that price has made on your charts. All price is doing is going from one PD array to another PD array. That's all that's happening, right? It goes from one to another, to another, to another. That's all it's doing, right? And your job as a trader, as a turtle soup trader, is to identify which PD array is going to reject, which PD array is going to bounce, right? It gets easier as you do more work like this, what we're doing here, going back and back testing it and seeing which ones reject, which ones don't, right? And for what reason, right? Because we had this PD array here. This fair value gap is a PD array, but understand why it didn't work. Because until you understand why this didn't work, you're going to go and you're going to short the next one that looks exactly like this, and you're going to lose. And then you're going to figure it out the hard way, right? Which is fine. Some people learn that way, but it's just the way things are, right? All right, so there's that. Any questions so far? We're coming on to an hour into this lesson. I don't want to overload you guys with information. That's not what I like doing, right? We do classes regularly, so we'll have more. I just don't want to give you too much, more than you can handle. Right? So this is a good place to start at, right? And we'll build up on this as we go, right? If you guys show up to the daily lives that we do, you will see this live in action, and it'll help you out a lot. Any questions so far? What is a PD array? Price delivery algorithm, right? So price delivery algorithm, it's simply anything like a fair value gap, a breaker, an order block, anything like that. Mitigation block, you know. What time do you start and end live trading? We start at 9:30, or usually 9:30 to 9:45. Ideally 9:45. Most of the time 9:45. And it'll go until we're satisfied. You said that ES is going to 3,900. Why is that? I kind of just showed. Can you look at this chart and tell me why I think that? Why do I think ES is going to 3,900? Can somebody look at this chart and tell me that? Monthly ES chart. Yeah. So this is the same model. PD array, higher time frame PD array. High right here that does not touch said PD array. And a live monthly candle that is currently rejecting. Right here. Boom. Right. This is why I think it's going to 39. Why 3,900? Because our first monthly target is right here. What is this? 38.39. Right? So I just said 3,900 since I didn't want to say 38.39 or 3,800. It says 3,900. That's why. You guys that are typing in the premium class, like the actual chat for the voice channel, type in the Cobra Zen chat instead, just so all questions are in one place. I'm not switching back and forth from channels. With ESU 2023, contracts only go back so far in time to use ES1 for looking back at data. Yes, I do. We're on ES1 right here. Do you use the BADG? Yeah, I have it right here. I have it on. I do have it on. The previous 4-hour fair value gap that took out 2 weekly highs, it retraced all the way back down to the fair value gap before hitting final target. Do you stop out when the trade returns to the fair value gap? No, I don't. My stop loss is placed. So, okay. Where was that set up at? Let me find it again. We'll go through it. It's right here. This is the setup we're talking about, right? This is the setup? I'm not confused. This one that came down. Okay. So, this is what I usually do. So, if I'm in this trade, my stop loss is probably going to be below this wick. Right? Targeting the highs. Now, let's say I enter this trade. My first target is right here. Right, so my first target, my daily target gets taken out, but my weekly target has not been taken out yet, right? My weekly target is up here. Has not been taken out yet. So there's 2 ways that you can play a move like this, right? You get a trim in at your daily target, right? So boom, there you go, you're trimmed. And then you can make your stop loss just above break even, or you can place it at a PD array within the range, right? Just to be on the safe side. So above break even or a PD array within this range. You know, I see Just off the top of my head, I'm looking at this order block, right? So I would probably place my stop in profit on the remainder of my position below this order block right there, right? So that's my new stop. My stop is moved up and it's now right here. So let's delete that. Price comes down, stops me out, right? Once it stops me out, I'm out of the trade. If it makes its way back down to the same level, right here, I will then look to see if we potentially turtle soup the same area again. If it does do it again, like it did here, right, I'll get my entry on a lower time frame, right? If it does do it again, I re-enter it, right? And then I ride to my weekly targets. Okay. Number two, you can just leave your stop loss where it was at. Right, in this case, stop loss was right here. You can leave it there, and after you get your trim in, you can let it go, right? Because at this point, it's a free trade, right? You're in profit already because you trimmed. So the worst that can happen is you end the trade break even. That's the worst that can happen. And then you figure out what happened wrong, what went wrong. But in this case, if you left your stop loss where it was originally at, it reverses well before it hits it, and then goes and hits your weekly target. So it's more of a matter of what type of trader you are. Are you going to be more conservative with your trade, right? How badly do you want to protect your capital? Do you want to, just stop out at a reliable PD array within the range and then re-enter later if the opportunity comes? Or will you just keep your initial stop loss? You don't care, you'll let it ride. So that's more up to you how you would play it, right? I would stop in profit at a PD array within this range. That's what I would do, right? And then I would re-enter if I see fit. Knowing you're going to short a higher time frame PD array, would you / should you play long until you reverse and short it? No, because it's the whole goal is to take high quality trades, right? High quality trades that fall within your system. So just randomly longing until it goes to your short target, right? Even though you know that it's going to go to that PD array, because what does price do? It goes from one PD array to another. Even though you know that it's going to, at some point, make its way up to that PD array that you want to short, I still wouldn't long it because that's not within my system, right? I'm not coming on here every day looking to take a trade. That's the difference, right? I'm not even coming into the start of the week expecting to take a trade. If my setup shows itself, then I will take it. But I'm not just going to randomly long until it goes and hits my short target, right? A good example of this was this right here, right? Once it broke this fair value gap, I had a pretty good guess that it was going to go to these next few order blocks, right? So I could have, yes, hypothetically, I could have longed this, but I didn't because it's not within my system. It's a low probability trade for me, for that matter, right? Just because it's not in my system, so I won't take it. It's up to you. However, I'm not going to tell you what you should or shouldn't do. I'm telling you what I wouldn't do, and then you can choose to follow it or not. But I wouldn't take this trade because of that alone, because it doesn't fall within my system. So just because of that, I'm not taking it, right? Any other questions, my friends? No other questions. Everybody's an expert. You have a class every weekend? Yes, we try to have a class every weekend. Usually there will be a class every Sunday. If not every Sunday, I will do a class through the week where you guys will have the opportunity to ask questions. Although through the week during lives, especially during live trading, you guys will have the opportunity to ask whatever question. So honestly, those live trading sessions are more classes than actually trading, because we only take one trade at most, one or two a day, if that. Some days there are no trades. So most of the time it's just me talking and showing setups and whatnot, right? Just going through the system. And this group is small enough, intentionally. It's small enough because now you can interact with me in the chat, right? There's not 500 people in here, and oh, speaking of that, let me just stop the recording real quick.